All right, hello. Welcome back to another episode. Real quick, I just want to kind of summarize in the past two videos. Well, in the past video, we kind of talked about generally like sweeping through this whole list and looking for something that is exciting. We talked about like personality and quickly like looking at like, is there something that like we kind of like vibe with? And I tried to break down those things. And I think it'd be worth, honestly, for you and me to go back and watch that, and then maybe on a later video I can expand on it some more, and I'll really be thinking about that for sure for future videos. That's what this whole channel was about, to be honest. So I think we're really like cracking into it right now, and I'm actually super excited because I did not expect for that to happen.
That escalated quickly.
So I'm excited. I'm learning with you, so it's cool. And so now what we're gonna do is we're gonna go to each of these that I labeled, and we're gonna dive into some like quick technical analysis. This isn't a practice video. This is a video talking about like it should be comparing the like after I've done the technical analysis to all these, it should be comparing like which ones are the best. And you know, ideally it's good to have like, depends on your account size. But for my Robinhood size, it's about 10,000 or 12,000. I think having around like six trade positions at a time is pretty good. You know, when you get to a bigger portfolio size, you know, I think you want to scale up, and eventually like 12 is like pretty good. So something like that. And so, all right, let's check these out.
I gotta go fast.
Okay, this one's done. Okay, looks done. Alright, Amazon's done. Alright, Netflix is done. Oh, I need some water. Alright, Spy is done. Alright, American Express is done. Alright, and Jen's done. Oh! Kick. You know, this one I'm actually pretty impartial, whether it's gonna go long or short. I think I need to wait a little bit longer to see if this trend happens, and I'd wait for a correction to happen, then I'd get in at that point, or if it takes a correction now. So you know what? I'm not gonna trade Chevron right now. Let's see. I'll put that, I guess. I don't know. But I'm not going to consider it for this group. Alright, Intel's done. Intel, I don't know if I'm going to include it. I don't know. I'll talk about it later. After looking at Johnson & Johnson, I think there's a lot of potential here, but I think I can really gain a lot if I just wait a little bit longer. I just don't think it's ready. I think Yeah, I don't have enough information. I need to wait a little bit longer until something happens. I need it to get out of its bracketing, and I think that'll be. I just need to wait till then. Right now, I'm pretty. I don't know. I don't know what to do with it, so I'm not gonna include it. I'm not feeling good about McDonald's anymore because excuse me. We're approaching a resistance, and it was a pretty intense rally, and there's a lot of volatility when it comes to what I see right here. I just see. I don't think it'd be too insane for this just to turn around right now. And I would I don't feel comfortable going short because we're so close to this. We're so close to this resistance, and it'll be like a new high, a new several year high. So I think it'd be safer if I just were to wait a little bit until I either see a reversal or that it passes this line, then I can come back to it. So I'm not gonna look at McDonald's. For the same reason as McDonald's, but in reverse. It's at its low for a long time. It's at a new low actually, because this was the support and it just broke that. But then right now it's it's bracketing. So if I was risky, I would be okay, I think bracketing's a good sign. After it's after it surpassed the support and now it's bracketing, there might be a reversal, but then I think that reversal might be small and then it might continue going negative, or there could be just such a big. I think if it was going to reverse and we're gonna see a big positive trend, I think it would have happened. It was attempted here, right here, and it should have done it here, or at least here, but now it's being tried again, and it's just, I don't know. I don't see enough evidence for me to want to do this anymore, so never mind, not 3M. Alright, Salesforce is done. And actually, I want to talk about it for a second. So this one was pretty interesting because it just surpassed these resistance lines. And there was so much volume in such a short amount of time, so there was a reversal here. But here, this is taking quite a bit of time, which this took a month to do, and this is I think 20 days or something. Just this to here, and so I think it's more likely to keep that gradual growth rather than this was such a short amount of time because it was overnight or something. There was there was a lot of slippage there. Slippage is when on the chart there isn't data for the move. That's typically what you see if there's a big move overnight. If there's a correction here, I think it'll be small, but because sometimes you do see corrections, even if it's still a gradual growth or decline around resistance or support lines. So I'm going to be extremely impatient with the losses, and so I have such a short stop loss because of that. Because I'm if there is going to be a dip, I just want to be done with it. But I think there's also a good chance that it could go as high as maybe this high over here, and it's also pretty representative of the growth of this past trend, and somewhat of this one as well. So yeah. So for Verizon, I've been thinking about it a lot, and I just like, I kind of just don't want to think about it anymore because I don't have like a strong opinion on which direction it's gonna go. I can make a case for either way, going up or down. And if I really had to try to, I mean, I guess I could throw something out there, but like, I feel like I'm doubting myself a little bit too much, or like doubting like a clear, like the amount of work that I'm going to put into. I just don't think is worth it because of this. Like initially, I already have so much lack of clarity in either direction. So like, I think I would just wait until I see a more obvious signal. And I have other options, other opportunities, so I just don't even need, I don't need to look at this, I think. But I'll wait on it. Okay, so I was interested, I was just like checking at the end if there was any others because I didn't look past here before, but I don't know. This just susses me out, so I'm not gonna look at that anymore. But anyways, so we're done as far as like the ones that I checked earlier and showed. I'm gonna carry this back over. I had a day chart over on my right screen. This is the exact same thing as just on a day, so I could look at it, try to look at like overall trends real quick. So Jesus Christ, I need to stand up. It's quick. When I'm looking at like the day chart and I'm looking at different like times, I'm really just like looking at it from like a bigger scale to really identify like the bigger trend. That way, like on a smaller trend, like if there's an overall bigger trend, if you're looking at a smaller scale, you're gonna see more of that same trend. So like if we're looking at a day here and we're seeing a long downward trend, if you're looking at a smaller scale, you're likely to see more downward trends. God, my brain is fried. It literally just took me like 5 times to explain that, and I kept like messing up my words and like using words that I think might make it confusing and all that. But anyways, that's just kind of what I do. I look it off on the screen and I kind of like look at things and I make other like little comparisons, but I don't do really like, sometimes I'll do technical analysis like a little bit. I'll just be looking at like trend sizes a little bit on a bigger scale so I can like come over here and like really get into it. But and they carry over from chart to chart, so that's why we still see them here on the day chart. But anyways, so I will compare these now. The red ones, the ones that I decided like, I don't think so. I'm just gonna ignore them for now. So we have Disney, and right now I'm gonna be, so now that we have those, I'm gonna be comparing like which have the most gains according to my like research, and I'm also going to be like thinking about like, yeah, one could have more gains, but it's like riskier. So I'm going to weigh that too. But overall, first, I'm just going to look at, okay, which of these seem like attractive? Okay, so Disney is about 11%.
Let's just back it up a moment.
Another thing I forgot to talk about is time. And I don't, because that's like a big factor. Like if you have a really good trade here and you're gonna make 11.5%, but then you go over here and look at Coke, and you're gonna make 4%, you're gonna be like, oh no. But what if this trade is a lot shorter? Like what if you predict that you're gonna get there a lot sooner?
You want to talk about it? No.
I'm not gonna talk about it for this video. Another video I'll talk about it. I think there's a better way to explain it, but there's a better avenue to show that. But for now, we're just gonna be talking about this. So 11%, Coke is 5%, Amazon is 6%, Netflix is 7.5%, Spy is like 2%, 7% for American Express. Amgen is 6.8%. Intel 7%. 7.5% for Salesforce. And that's it. Okay, so wait. Hold on. Before we get into the next part, I wanna talk about how important the next part is. So the next part is all about how to analyze like risk management and preventing yourself from blowing up your account. Now we're at the point of the series where some people might be like trading if you're like brand new and stuff like that. It's extremely important to do what I'm about to show you. This will prevent you from losing significant amounts of money. Every trader goes through it, so don't even feel bad. Like if you do anyways, you will go through it. Everybody does. But hopefully this will help make it less impactful. So listen up and watch closely. First thing I'm gonna do is I'm gonna try to find like the safest one. What I think is like the safest trade, and that's where I would put a big portion of my money. So I'm gonna base it off like a 10K amount and portion it out that way. I'm gonna try to have around 6 trades. So Disney seems pretty good. So this is where we definitely get into like risk management and how you want to assess how much risk do you want to have, because a really conservative trader, probably with like more money and more to lose and like more likely to change your lifestyle if you lose a lot, will probably want to go to like SPY, where there's a very little gain, but it's like very supported. And probably put the majority of the money in there. So like almost like half, maybe like almost half, so like 4K out of the 10K into this. I'm a little bit riskier, so I think I would like to put, like, out of all these, I like Amgen quite a bit, and I think I like Disney a lot. Netflix looks pretty good too. What was that, 7%? Actually looks better than Amgen, I think. I really like Disney, so you know what? I would probably put like, I'm gonna write this down. I'm just gonna say Disney. I don't know. I might change these numbers later, but 4K. So total 10K. I'm gonna do Disney 4K. I might like change this. But then Coke's pretty cool, and I like, well, I don't know. I'm just gonna like go back and forth and just kind of really think about how much I trust these predictions. I mean, I tried my best a little bit ago, but now I guess I'm really like, I'm balancing the risk versus reward. I'm thinking about like how much portion do I want to put in it, how much risk do I want to take, stuff like that. So I like Amgen. I like how it seems to be, it's more likely to be like more predictable that it's gonna happen. It's a little bit less than like, so 6.8%. Netflix is like 7%, but like it doesn't seem as predictable. Like, I don't know, I think there's like a slight chance there could be a reversal here, at least correction, and then maybe it might go up later, but that's kind of like wasting time. Like money, my money isn't growing if it does have a slight correction. So I'm a little bit more comfortable with like Amgen, and it's pretty close in terms of like gains, assuming that it's going long is the correct way to go. So you know what, I'm gonna do that. I'm gonna go with Amgen. MGN, and I'm gonna say like 3K. So I've put 4K in Disney, I've put 3K in this, so that's 7K, so I have 3K left. 3K left, and I'll probably put like 1K in each of those. So looking at Intel, I just see it as like kind of risky. It's definitely riskier than like Netflix. So this is a potential 7.2% gain, but there is a very big potential risk. Whereas Netflix, what was that? Okay, hold on. Let me go back to Intel. It's a 9% risk. And honestly, I'm just starting to like just not really like this trade, and especially compared to like Netflix. Just seems better. So you know what? I'm gonna do. What's there? Hello. Okay. And then SPY. I don't know. I kind of feel like being a little risky, so maybe I won't put anything in SPY. I do kind of like American Express in this situation, so I'm gonna put 1K there. XP 1K, and look at that. There's nothing else down here that I'm interested in. What was over here? Amazon's kind of nice. I have Coke that's left, so let me try to think. Okay, so Amazon 6%, higher volume than Coke, probably more stable, probably more likely. 4% potential risk, 2% potential risk. To be honest, I see these like as very similar. For some reason, I'm kind of leaning towards Amazon. Sometimes I like to take trades to like kind of like force myself to learn. It's probably not the best idea, but like in this case where I'm like pretty torn of like which one should I go with, and I have 7, 8, 9, I have like 1K left. I'll probably take from this, and then I'll put like 1K in Coke, and then what was the other one? Amazon. 1K. And like I don't have to do this, and I should just like choose one, but like I need to diversify anyways. But I mean, in actuality, I could just like record it. I could just like write it down, like, or like mark it and see like what actually happens. And in the future, I could be like, oh, that happened. Maybe in the future I should refer back to this or whatever. But this way I'm definitely going to be paying attention. This way, like later I can actually see like, oh, I gained this much on Coke. And then I'll look at Amazon like, oh, I gained this much. Like I will, and then I can go back in and I can like look at it and see if I can find like something that I missed right now. But I feel like it'll likely have to do more with personality rather than like technical analysis. And I probably wouldn't want to do technical analysis because because at that point I'd be looking for a reason why, and then I think I'd just be making connections that I couldn't have predicted now. Like I think I pretty much did all that I could do during these. Like I could have been more thorough, yeah, probably, but at the same time, I don't know, maybe not. So yeah. Am I happy with this spread? Yeah, probably. With a lot of like, I don't see this as that risky. I like the trade. I like the risk versus reward. I like generally like just kind of like the trend, what's going on. I mean, I just kind of think it's the move. So I'm gonna go plug these in. These are all long. I'm not gonna take any short positions. I just didn't really see any. I would have, but honestly, I think it's kind of nice that they're all just like long. I don't have to talk about options right now. I still just don't feel like we're quite ready to dive deep into options, especially if I feel like you're brand new. I just think like no matter what, getting a good like technical analysis, those skills like under your belt is really important before you go into options, or even honestly before you even like trade, like trading long, just like this, like his options aren't hard to understand. Really, the hardest part about trading is telling, like, okay, where's the price most likely going to go in what direction. So that's the biggest thing anyways, so it doesn't quite matter. All right, I'm gonna go put those in, and I have a lot of ideas.
Let me hear it.
Practice episodes where I don't use indicators, and I was gonna trade super volatile ones like AMC and GameStop. I was gonna trade crypto, or I was gonna show crypto to show like kind of why I don't trade crypto. Overdo technical analysis. It's like maybe I'll be exactly right, or maybe I'm gonna be so far off it's ridiculous, and we'll see. Like we'll just see. I just wanted to test it out. So that's what's coming up in the future. Stay tuned.